So if you're new to insurance or you haven't had insurance in a while, there's a lot of things to know. There's a lot of do's and don'ts and different things that affect prices. That's essentially what this whole channel is about. But today we're going to talk about the 5 major mistakes that most people make when they're purchasing either home or auto insurance. If you're new to the channel, don't forget to hit the subscribe button if you want more advice like this. Otherwise, a thumbs up helps me the most. There's a super thanks down there if you want to donate as well. So the first one is insuring your home for the property value and not what we call the replacement cost. Homes are broken up into 2 different values. There's the price you pay and the price that it's worth, which includes the land, which you can't insure. And then there's the replacement cost, which is the actual reconstruction of the home. It also mixes in the cost to rebuild it if it broke down, to hire a company to move all the junk away, the debris has to go, there has to be new laws and new ways to run things if the laws have changed over time. And so there's a lot of other pieces built into that. In most cases, it's actually the opposite. You would think that it's either underinsured or overinsured, but it's usually a specific amount based on the materials of the home. Taking a common home, let's say a $300,000 house that you would buy through Zillow or whatever you're going to buy it from, is worth $300,000. That includes the location, the land, and all of that. Well, that house, if it's a 2,000 square foot house, would be close to that $300,000 based on the average. But if it's a 1,500 square foot house, even though you paid $300,000 for the home, it might only be worth $250,000 to $280,000 to rebuild the home. Take other considerations. The older homes in the 1920s or 1950s or just older homes in general do cost more to rebuild. If it's a brick type house, the cost is going to go up. And so you may only have a $300,000 house that you purchased, but it might be $500,000 to rip it all down and replace the home as it was. And the second common mistake is where people choose their insurance based on the price alone. I do see where it kind of fits with some of the auto companies. If you're working with the major ones, your Progressive, your Geico, your Allstate, your State Farms, and Nationwides, and AAAs, and all of those guys, you're commonly just comparing companies. They usually are all A-rated or higher, which is good, but you may have had good or bad experiences depending on what coverage levels you chose. A lot of it has to do if you're working with an agent or going direct to the company. There's some different costs to that, and the prices vary with each company because of those brands. The downfall is if you go back and watch any one of our channels, you're going to see a lot of complaints where people say, don't go with Geico or don't go with State Farm or don't go with this company, because people do have bad experiences. And it all breaks down to, do you trust the company that you're going with? If you're just getting the bottom dollar cheapest rate, you might want to watch my video on how to pick a company based on reviews, because that will play a huge factor in whether you should go with them in your area. Insurance companies give rates based on what they call a profile. They want to build up your risk or the risk tolerance that they can have with you, and that'll determine the price. So if the price is too good to be true, you may want to think twice or find out some of the details of why that price is so good in your area. The third common mistake that people make is dropping or removing certain types of coverages. So for example, a lot of people have flood insurance in certain areas, and once they don't have to have a loan or they don't have to have it, they remove the flood. Other people have a home where they own it and it's all paid for, and then they just don't pay the insurance because they don't have to. Car insurance is a little bit different because you have to drive, but when you're removing coverages, you got to be careful because some of them don't cost a lot of money to have. Flood insurance, for example, is a common one that people remove, but they don't realize that that's a reason they have that flood zone. It's because those zones are known for over a decade to have some major occurrence where you can lose everything that your house is built on. The foundation's messed up, anything that happens, your $300,000 house or $200,000 house might need to be completely rebuilt because of those reasons. So be careful if you're going to remove your flood or in general a insurance policy coverage, because it may not be worth it in the end if something major does happen. More commonly, this leads into the fourth piece, which is an answer to a lot of the situations. Instead of removing the coverage, what I would say is try to find ways to make it cheaper. You can raise the deductible, you can do whatever the case is. Having no insurance versus having a $20,000 deductible seems crazy, but nothing versus something with a large deductible. Something with a large deductible at a low cost is probably going to make more sense in the end. Most people do $1,000 deductible to start with for your home, but then they can bump it up to $5,000 or 2% or 8% or whatever the case is, to where they have really high deductibles. But in the event that there's a total loss, they've got enough coverage so that they have lost a lot of money, but they didn't lose everything. It's kind of like doing Bitcoin. You want to set a stop loss in case the price crashes, and that way you walk away with a little bit of an injury, but you still have funds to invest into later. And the reason that leads into number 4 is because a lot of people on the fourth reason is they take the lowest or state minimums. This is more of a car insurance piece where they try to just skimp by and get the cheapest route. In some states like Arizona, they have very low minimums. I believe it's only $10,000 is all you have to carry in general. Same thing for California, where they might have a lower limit like 30-60. That's $30,000 a person, $60,000 per accident. A lot of people don't realize that in New Jersey you can do a basic policy. So there's a lot of pieces where you can have just minimal coverages that you don't pay a lot, and it's really designed for people that can't afford the insurance. The unfortunate part is you're still liable for anything that happens. So if you do get a $10,000 policy for just property damage and you hurt someone, that's $80,000 medical bill. Now you have to out-pocket that expense. Well, it doesn't matter because I don't have any money. Well, that doesn't negate you from still owing that amount. You can't bankrupt that. So what they're going to do is, in a lawsuit, they're going to garnish your wages. They're essentially going to take 30% of your income. Some states are different, but it's usually that amount. And you're just going to pay that over time. It's no different than you paying for a brand new couch and you got payments for the next 10 years. They're going to do the same situation with an injury or any claim that you're liable for. So if you're new to insurance, you're probably wondering, like, what is my next steps? Like, how do I know what coverages I should have on my auto policy or my home policy? Well, luckily I did a video here that you guys can watch that'll go over the actual specific details of what coverages most people typically carry. And the 5th common mistake that people make is they don't purchase renter's insurance for those that rent. That's a big thing that we see in the insurance industry, and I've even sold a ton of policies where people call the next month and cancel it just because they wanted to get in the door and buy something nice, but then they lose it. They don't want to pay for it. It's that $12 to $15 a month that just isn't worth it to them. And what you don't realize is most of the time it actually makes your auto cheaper. I know you may have canceled your policy, but when that renewal hits on the auto, sometimes within 30 days even, they're going to raise your increase because you started with the multi-policy discount. By taking that renters off, even though you're only paying about $15 a month for that, depending on the location, you're going to lose a 10 to 20% discount on your auto. So if you're paying $100 to $200 a month in your auto, then you're going to benefit by having the renter's policy. That's not the only reason you want that, is because there's a liability portion. When you're not in your car, you're still liable for things that happen outside of that. And that renter's policy comes with a liability that covers you in a lot of different areas. The bonus tip, which you may have gotten out of this video already, is that finances is really the biggest piece that hinders you getting the right policy. It takes time to learn and figure out what kind of coverage you need, but knowing that you have the right price is also a good fit as well. I get that part. What I recommend that you focus on is, if the money is the issue, you need to watch my discounts video where we go over what discounts are going to be best for you in the insurance. Go ahead and watch that video. It's going to give you a ton of details. It's going to give you a better price on your current policy just the way you are. I'm Mark with Think Insurance. I'll see you in the next one.